Hello, and welcome to KNTNF. In this video, I want to have a look at the valuation, more or less fundamental valuation of a gold miner called K92. Actually, we've looked at this valuation with the members at KNTNF relatively recently, and this video is a bit of a delayed posting. So if you want to have immediate access to our analysis and discussions, you might consider joining us at KNTNF. You can do that by clicking this register button. Now, jumping into the valuation of K92, again, let me remind you that this is a fundamental valuation where I look at the value of the resources, the precious metals resources in the ground after extraction costs and after any debts that the company has. We look at the value per share with the consideration of time value of money and with a secret sauce on insider shares. But again, this is a fundamental valuation in general over the long term, probably over the next 2 to 3 years. The price might tend to converge towards this fundamental valuation, whereas day-to-day volatility can take the price quite far away from that fundamental valuation. You can confirm all of the data I use in this valuation by checking the Q3 report for last year, January this year corporate presentation, and Yahoo Finance. As usual, we're going to have a look at 3 scenarios for gold price. With the balanced scenario a couple of percentage points below the ongoing price, balanced scenario at 1760. Conservative scenario another 10% below that at 1584, and optimistic scenario only at 1937. Perhaps you might think that our optimistic scenario is not really optimistic enough. Over the next 2 to 3 years, will gold price fluctuate somewhere around 1940? Who knows? I think there is a pretty good chance for gold price to rise far above $2,000 per ounce. If you look at the company reports, you will see that the company only reports measured and indicated as well as inferred resources. They don't report any of the proven and probable reserves. In the usual valuation, I only look at half of the measured and indicated resources, plus full of the proven and probable reserves. In this case, though, as the report only includes M&I resources and a bit of inferred resources, only considering half of these M&I resources might lead to a gross underestimation of the value. So what I did instead is I looked at the expected gold production over the mine life to 2032. Adding up all of the expected production gives us about 3.1 million ounces, and I'll treat that same as I usually treat proven and probable reserves in my valuations. The line you can see over here is the all-in sustaining costs expected over the years, and moving on to the all-in sustaining costs, we can also see that in the reports for the first 9 months of 2020 at $770 per ounce. Plugging this number might actually give you a relatively conservative leaning valuation, as you see from this chart, all-in sustaining costs are generally expected to decline over the years. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. Looking at the company's long-term debts, those are only $0.6 million, but I'm going to add planned capex expenditures to the company's debts, which brings the total number to $140.6 million. Shares outstanding are nearly 219 million shares, out of which 2.19% are the shares held by the insiders. I throw in a small formula for insider shares as those might turn out to be strong hands, perhaps supporting the share price. Looking at the time value of money, I will use a discount rate of 5% with a discount period reserves in years found by dividing the reserves by the annual production, where annual production is extrapolated from the first 9 months of 2020. That actually gives you a very long mine life of 34 years as opposed to around 12 to 14 years actual expected mine life. So again, this leads to a more relatively conservative leaning valuation. Finally, coming to those valuations, the conservative valuation, which again includes the gold price of 1584 and only looks at those assumed proven and probable reserves, is $5.27. Which is just a little bit under the ongoing market price of $5.36. So the investment risks in the relatively longer term are probably not very high. The balanced valuation, which includes the gold price of 1760 and only looks at those assumed proven and probable reserves, is $6.47, which is around 20% above the market price. Whereas optimistic valuation, which only looks at the gold price of 1937 and still uses only those assumed P&P reserves, is $7.68, which is around 43% above the ongoing market price. And over the next couple of years, if gold performs better, if it does rise far above the $2,000 mark, there's a very good chance that the share price of K92 will be quite noticeably higher than this optimistic valuation. Next, looking at the chart, you see that K92 actually has a relatively high leverage to gold. That's the first point. While gold has increased by around 20-25% since that March bottom in 2020, K92 has actually increased by a factor of 5 or 6. Additionally, since August last year, while gold has declined quite a lot from around 2070 to around 1800 at the moment, K92 was more or less going sideways and even made a relatively recent new high in January this year. So as gold bottoms, perhaps over the next few weeks, and starts rising, there is a pretty good chance that K92 first retests the resistance at around $6, close to that 50-day moving average. The next resistance would be the previous high at around $7. And as I mentioned, there is a very good prospect of much higher prices. And lastly, talking about the highlights that haven't really entered into the model, recently on the 18th of February, company announced relatively interesting high-grade drill results. And looking at the price chart, as the price has actually come down in the same time, together with the gold dropping a little bit, there is a good chance that these relatively attractive drill results haven't really been reflected in the prices yet. Secondly, as you saw from the expected production schedule for the mine life over the next 12 to 14 years, production is expected to increase significantly, nearly doubling by 2024. So again, in the longer term, over the next 2 to 3 years, that is likely to turn out to be a very strong catalyst for share price appreciation. And the last thing to point out is that besides precious metals of gold and silver, the company also has copper resources. So if copper continues to do well, which it has been so far, that will actually also help K92. For more analysis on gold miners, as well as a range of other assets, feel free to join us at myfinancesteacher.org. Lastly, before you go, remember to hit that like button and share the video with your friend. I wish you a pleasant day and good luck in your trades.